The overall action remains strong, while the indexes continue to digest recent advances. Keep watching and we'll go over where we're at now and take a look at some previous bottoms to see if anything happening now is out of the ordinary or if it's right in line with our expectations. What's up, guys? It's Brandon from Amphibian Trading. As always, make sure you hit that like and subscribe button so you don't miss any future updates, and then let's get right into it. So going back to January 12th, we got a Walter Deemer breakaway momentum thrust signal. It's been 25 days since that signal occurred, and since the close of that day, the Nasdaq has been up as much as 11.5%. Just recently, we've seen a pullback to the 21-day exponential moving average, but so far, this pullback has been healthy, right at around 5.25%, and it's in line with what we can expect when a new rally takes hold. If we go back and look at some previous times that this signal occurred, we can see so far this pullback seems normal. Let's look at June of 2020 to start. I've highlighted the same 25-day window since the breakaway momentum signal occurred, and you can see in that time we had two pullbacks. The first one here around 6.75%, and then the second one a little shallower, right at 5.5%. From there, we can go back even further to 2009 when this signal occurred 3 times. Each time during that 25-day window, we saw pullbacks similar to what we're seeing now. In March, we saw a 6.5% pullback, July saw a 4.25% pullback, and September saw a 5.86% pullback. So as you can see, so far this pullback still seems in line with expectations. Another rare signal we saw recently was having 3 follow-through days in a row. And again, if we look back at other times this happened, everything seems to be normal. This happened in November of 2020, and there was a quick 5.6% pullback before the market continued higher, and then again in April of 2009, which also happened to be within that 25-day window since the breakaway momentum thrust, just like happened recently. We saw 3 follow-through days in a row and then a quick 4% pullback before continuing higher. So let's get back to today's action where since the beginning of the year, we've seen a ton of accumulation and very minimal distribution. The Nasdaq currently remains in a power trend. Both signals on the market stoplight indicator remain green, and as we've been pulling back towards our 21-day exponential moving average, volume overall has dried up, which leads me to believe that we are still digesting recent gains before we make another push higher. However, we are still in a very news-driven environment, and the dollar and interest rates have been showing strength since the beginning of February, so ideally, we'll start to see those lose some momentum, paving the way for equities to move higher. Shifting away from the indexes, I want to point out how many stocks have seen 5 or more weeks up in a row recently, and many of them with increasing volume. William O'Neill always said if there is 5 or more consecutive weeks up, we should be paying attention to that stock. Now, some of them are beaten down past leaders, but others are new leaders sitting right at the highs as well. So we have Airbnb, which was up 6 weeks in a row, Axelis, Air Test Systems, Arista Networks. You can see all of these showing just weeks and weeks up, highlighted by these blue boxes on the charts. We have Alteryx, Elf Beauty, On Semiconductor, Cloudflare. So you can see it's not all just from one group or sector either. It's all pretty spread out. So let's go back and take a look now at 2009 and how some of the leaders then came out of the 2008 Great Financial Crisis. Let's start with Lululemon. You can see the stock was beaten down, but then it rallies up 7 weeks in a row, and then it pauses to digest those gains, forming a 10-week base before breaking out and moving higher. Next up, everyone's favorite, Apple. Again, very similar. We have 9 weeks up in a row, and then Apple pauses for 5 weeks to form a 9% deep flat base, and then it's off to the races again. Okay, and let's look at one more, Tempur Sealy. Once again, we have this wall of blue with 9 weeks up in a row, and then we pause, we form a 10-week consolidation, digesting those recent gains, and then the stock just keeps moving higher. So at this point, as we continue to digest the recent gains and the walls of blue we've seen, we could see some new bases form that could offer up very nice low risk entry points at what could potentially be the start of a big move higher. Two names that I'll be watching very closely are Global Foundries, GFS, and Arista Networks, ANET. So let's start by looking at Global Foundries. We have this base on base pattern that broke out this week on positive earnings. Volume throughout the base was low, and you can see it gradually began picking up as the stock started moving up the right side of its base. If we go over to the daily chart, you can see we recently broke above the highs from the left side of the base, and now I'll be watching this for a pullback towards the 21-day exponential moving average as a place to potentially pick up shares. Okay, and next up is Arista Networks. Very similar to GFS, we have this base on base that broke out with earnings this last week. You can see volume picked up as the right side of the base formed. And over on the daily chart, I'm looking for the same thing here, which would be a pullback towards the 21-day exponential moving average right after we just recently broke above the left side high of the base. So there's a few ideas to watch as we wait and see if this remains a normal healthy pullback before we continue higher. Thank you for watching, and if you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button so you don't miss any future updates.